Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were active near the bottom of Friday's range, and on the upside, the resistance area at 1475 to 1675 continued to be in play, and sellers have been active there. So we're very balanced heading into the open at this point, and we have to be open to a move in either direction, but holding above the 0975 to 1075 pre-market support would indicate buyers being more dominant, and we know that on the larger time frames, the buy side has been more dominant so far, and nothing has really changed. We're simply balancing in a bigger range, and the buy side can still step in. So looking at Nasdaq and Russell, we're seeing that those markets are holding up fairly well, and from here on out, holding above 0975 to 1075 could result in a upside breakout. Now on the upside, the main inflection point in the short term is 14.5 to 16.5, the pre-market resistance area. The zone has been tested a couple of times in pre-market, so at this point, if we start heading back up there on some decent upside momentum, then ES could simply take that zone out, and then from there test 1875, fill the gap at 2175, and then the bigger inflection point is 22.5 to 24.5, which marks the upper edge of the recent range and the recent balance. On the downside, holding above 0975 to 1075 would bring the gap fill and prior VPOC into play at 05.5 and 06, and the primary support on the downside is 2102 quarter to 0475. That essentially marks the bottom end of just this recent range. So that's the edge of the short-term range over the last few days, and that's an area that the buy side can still defend first time down, especially if we're not seeing any decent weakness on the downside in the internals. So if momentum is not really that negative, or the AD line is just slightly negative, or even holding in positive territory ideally, then the initial support zone still has a chance to hold. In the event of a break below 02 quarter, we have a high volume node at 2099. At that point, we have to be a bit cautious on fading and entering long, because a break below 02 quarter would mark a break below the recent 4-day balance. And from that point on, if it's happening on strong momentum and very weak internals, ES may have to go down to 93.5 to 96 in order to attract responsive buyers, and possibly even 90 to 92. Now that's something that's still yet to be seen. Right now that scenario is not the one that's in play. Right now the buy side is being more dominant, and we are going to focus more on long setups rather than short setups. But when a market is range bound and stuck in balance, it requires a flexible mindset, and you really have to be willing to trade in either direction, because neither side is really extremely dominant or in control. You're simply going through a two-sided market, and it's simply balancing in a range. But within the balance, we've seen that the buyers have stepped in and defended and been very active on every pullback into support. And we saw that on Friday, and even in the overnight session, the buy side has been more aggressive and more active. So for now, in order to short, we need to see some very clear-cut signs that the sellers are taking over control. But until then, if it's kind of a mixed picture, then it's still better to give more edge to the long setups rather than get aggressively short in the middle of the balance and then just kind of get chopped up and stopped out for no reason. So it still makes sense to be a little bit more bullish than bearish, especially given how the other markets are behaving. Now, looking at the other markets, in the Russell, the 53 to 56 area has been resistance. That area has been pointed out several times over the last week, and it has held so far. But if we get a breakout in the Russell above 53 to 56, that would signal a much more bullish market, and that could trigger a pretty decent upside move in the S&P as well. And from there, ES could quite easily go up to 22.5 to 24.5, and possibly even put in a balanced breakout to the upside, and go up and test 30.75 to 32.75. Looking at the relative volume, so far it's running above average, and typically when we get that, we get more volatility and also a wider range. So with the range potential being relatively high today, as long as that relative volume sustains above average, we could actually definitely move up to 22.5 to 24.5. And if we're seeing a lot of momentum to the upside, and TF is breaking out above 53 to 56, and Q is holding above 45.30 and breaking out to the upside, then that could set up the conditions needed to get an upside rally in the S&P. So, for now, we're stuck in balance, open to a upside move more than a downside move, but still requires the flexibility to take trades in either direction. Just be a bit more cautious on short setups. So if the market has moved already a decent amount to the downside and we're testing support, then you want to be careful. The only time it would make sense to get aggressive on the short side is if it just turns into a complete reversal and we're seeing a lot of momentum on the downside. Internals are completely negative, or much more negative than they should be, and it's shaping up to be a liquidation type day where you think that ES can go down and test 93.5 to 96. But unless we're seeing some extreme signs of weakness, it's still going to make more sense to be more active on long setups and just be a bit more careful on the short side. So those are the main thoughts heading into the open. Let's see if the buy side can maintain the control that we've seen in the overnight session, and we'll take it from there.